Good evening traders, it's Simon here with a video on the monthly charts. So the review this week will include the DXY and the dollar. We're going to put Euro, Pound, Kiwi Yen, the US30 and Gold. The reason why I chose these ones, these are the cleanest charts you can pick for the monthlies to give you some good sentiment and idea of what's happening next. So we're going to swap between the DXY and the US dollar quite frequently. At the moment you can see last month we end up with this kind of, we did break out, but a doji type candle. That doesn't give me much sentiment to the upside, to be quite honest. It really isn't the greatest in the world. RSI is set 100 as well at this point. So if I was looking to buy the dollar now, it wouldn't make much sense. A pullback would make sense for me personally. On the DXY itself, I'm not drawing any lines in here at all, just to make it nice and clean. But we know we've got 97.5. You zoom out there, you can see a level there straight away. So we've got quite multiple touches there, or 97 there as well. So for me personally, we're in that area where it's touch and go. I'm not really interested in it. Now, when we moved up to the US dollar itself, the US Dollar Index from FXCM, it's an equally weighted dollar index. You can see we've got this double top pattern forming here on the weekly chart. You can see it, and you can definitely highlight the head and shoulder pattern here. So for me personally, I'm not really going to be that bullish on the dollar. But I need to, obviously, well, we've got a lower low there anyway, we have. So this is why I'm a bit concerned. Obviously, to confirm a big bear trend, if this was to move down, you'd have a big break to the downside. It doesn't mean the dollar does descend quite a lot. I'm not saying it'll break down massively, but what I am saying is this pattern does look bearish, and when you get a pattern like this, you at least normally go to its next support level, which is clearly the monthly 50 EMA on the dollar chart. So for me, this is where I get the ideas from, where I think, oh, you know, dollar's not looking that strong. But further down, when we look at gold, I can show gold's in the middle of nowhere. So for me, I'm kind of just sitting on the fence, taking shorter term trades at the moment on the dollar, and to see what really happens. So the next pair I like is Euro Pound. So why do I like this pair so much? Well, if we just look at what's happened here, in the recent, say, 10 years or so, we've had multiple touches on 0.9. And then obviously we broke down, we tested 0.7 and we rallied up to 0.9 again. 1, 2, 3, 4 touches and a breakdown to the downside. This upward sloping trend on the weekly chart was quite strong. We broke down to here and we've got some doji candles forming on the monthly chart. Again, RSI sitting at 0, so that's quite significantly saying that we may want to look at buying. And I'm just going to show you the weekly chart here of Euro Pound. And you'll see why I'm quite interested in this. The weekly chart does give me a good sentiment. So this is what I'm thinking of. The euro to move up to this area here, 876 to 88. This area around in the yellow box. That's what I'm looking for as a, so it buys, move up there. And then we're looking for a sell after. The reason why I'm looking for a sell afterwards is because we've got 1, 2, 3, 4 touches on 90 here. We've had multiple rejections time and time again. Moving over in the past for many years, even back in 1995, we had the same problem. So for me, it's definitely a sell. But right now, short term for the next couple of weeks, at least a move back up to test this lower area here. That's what we're looking for. So I'd be looking for longs going back up to this weekly 50 EMA. If you notice, the weekly 50 EMA here as well has been respected in the past here quite a lot. So once we break out the pattern, if you know it's break and retest and goes again, we're in a pattern here, break down to downside, back up for the retest, and that's what I'm looking for Euro Pound. Kiwi Yen. Now this is a very easy chart to analyse on the monthly chart. It's very simple. I've got a base at 70 and I've got a downward sloping trend line. The monthly 50 MA has been respected several times, and now we're going to start breaking down again. So I'm definitely looking for a short down to 70 if I can find that on the lower time frame. As you can see, this 70 has been a key level for quite some time. And this downward sloping trend line has been key as well. RSI is not nowhere near how it normally is when I like to sell. But if I can get a trend change on the lower time frames on this chart, it would be definitely going down. If I can't confirm my trend change, then I won't bother taking the trade at all in here. But this is just a very simplistic way of looking at trading. You get the idea. You get, this is the overall trend. The trend may be chopping around here. You're in a triangle. That's all it is. So going down to 70 is good. You could say I want to wait and buy at 70. That wouldn't be a bad decision to do either. So they're the things you want to look at, and that's what I'm keeping an eye on here. The US30 Dow Jones. Now, to me personally, someone highlighted this to me, and I like what they showed me. So I see a little triple top forming here, especially clearer on the weekly chart. And what we've got here, RSI has been at 100 for ages. It's moved down, and we chop back up again. So we've got divergence on RSI, which is interesting to see. But when we drop down to the weekly chart on the Dow Jones, what I see really is this lovely triple top pattern there. It does really tempt me to take a trade, to be quite honest. If we put RSI and you've got double top pattern on RSI as well, you have at 100, so it really helps me there. And when you look at the divergence on MACD, you can see you've got a bearish MACD divergence as well. So they're the things that does present to me and says it's going to be bearish and it's going to move to the downside quite significantly. This is what I'm looking at right now to take a trade on, roughly something like this. You know, it's a big stop above the highs. You could wait for a pullback. You could obviously wait for lower time frames for something like that to happen. There's multiple things you can do, but notice the volume as well picked up to break down the daily 50 EMA, which is I think quite key. And this will be when you'll be looking to take the trade. My out at the moment is only at 2200. The reason for that is when you come back to the weekly chart again, you'll see, sorry, no, the monthly chart, sorry, you'll see we'll be around about the monthly 50 EMA, and it's been tested a few times already, so I wouldn't want to trade through that. I might hold a position open a little bit longer, or cut a little bit of the position off and keep something open just so I can add into it later on, but that would be definitely what I'll be looking for there as a trade in the very near future. And gold, so this is the reason why I'm a bit concerned about the dollar, because gold itself is in the middle of nowhere. So this is what I've got for gold. I'm very bullish on gold, but I'm just waiting. So what's happened? We've rallied up since 2003. We've rallied up hard. We moved back down. And we just chopped around this triangle. So for me personally, that means that all the buyers and sellers are just fighting here, just chopping around. And it's collecting people bit by bit by bit. Now some people are going to say, "Oh, it's in a downtrend," blah blah blah. I just see it's a holding pattern. I do see us breaking out to the upside, because if you look at the Dow Jones again. Let's just show what happened here. So in 2007 we dropped massively. We made a massive new low actually as well on here. So on that time there, from 2007, September 2007 to 2009, if we now look at what gold did in the same period, 2007 to 2009, we just rallied up after as well. It had a big stepping stone. Now for me personally, it moved up and moved back down again. And so I feel that the Dow Jones and gold does go hand in hand here. Looking close at the moment though, my problem is this here. The month 50 has been chopped through so many times, I don't trust it at the moment because it's in a pattern. And a move back down to this downward slope, upward sloping trend would really make a lot more sense. But like I said, if that moves down, the dollar would move up, and as we know, our view on the dollar is that we think that will move down as well, which it all can't happen. So we'll see what happens, play it by ear. But at the moment, just so you know, if you break above 1350 with a bullish engulfing candle, come up, let's say we get the 1370, 1318, a bullish engulfing candle, then I'd be happy to just buy along there. However, if we move back down to here to say 1220, something like that, even 1200, I'll be happy to buy as well. So I'm just going to sit on my hands for this one for the moment and go from there, and we'll wait and see what happens. Okay guys, I hope that helps for the monthly directions at the moment, and we'll speak to you soon. Take care.